Hello students, in this video lecture, we will solve problem number 8 of consolidated financial statement, that is holding and subsidiary company. Problem number 8 deals with an adjustment relating to dividend. That is, whenever dividend are issued, what will be the effect of that dividend on preparing consolidated financial statement. So intercompany dividend. So dividend paid, first one is if the dividend is paid out of pre-acquisition profit by the subsidiary company. That is, whenever holding company is acquiring subsidiary company before acquisition, if subsidiary company is giving dividend to the shareholder, what will be the effect? The effect basically is that there will be effect on the preparation of date of acquisition, calculation of goodwill, capital reserve. That time this dividend will be deducted. Only whenever dividend is issued out of pre-acquisition profit, that time this will be the effect, and there will be no effect on profit and loss account. On the other hand, if the dividend is paid out of post-acquisition profit, it will be credited to profit and loss account. Okay, please remember that whenever dividends are issued after the date of acquisition, it will be credited to profit and loss account. Okay, these are the two important adjustment of dividend. So now let us start with the solution. Problem number 8. This is the balance sheet given with problem number 8. If you see balance sheet, there are two companies. There are H Limited and S Limited. So H Limited has purchase control on S Limited as on 1st January 2017. 1st January 2017 will be called as date of acquisition, and H Limited purchase control of S Limited, which basically means this line explain you that H Limited is holding, S Limited is subsidiary. We have to see how much shares have been taken by H Limited in S Limited. If we see non-current asset, it is clearly mentioned that H Limited is holding 45,000 equity share in S Limited as cost, and they have paid 6,75,000. So total shares S Limited is having is 6 lakh divided by 10, that is 60,000. Out of this 60,000, 45,000 is being acquired by H Limited. So basically H Limited is holding S Limited. Once you have understood which is the holding and which is the subsidiary company, you need to see the additional information. On 1st January 2017, S Limited has 1 lakh in general reserve. This is required to calculate cost of control, that is goodwill or capital reserve, and it is also given that 1,20,000 credit balance, that is profit is there in profit and loss account as on 1st January 2017. Additional information is given that in July 2017, 10% dividend was paid by S Limited. So in July 2017, basically means that after date of acquisition, that is from post-acquisition profit, 10% dividend was paid for 2016. Okay, so we have to see what will be the effect of this dividend paid. 10% dividend means from the share capital of 6 lakhs, 10%, that is 60,000 will be paid as dividend. Dividend received from S Limited was credited to profit and loss account. Is this correct? If the dividend is issued, dividend is given from post acquisition profit, should it be credited to profit and loss account or not? We have to check that. But if we read this statement carefully, it mentioned that in July 2017, even though it was declared dividend was paid in 2017, it was paid for the year 2016. So basically, this dividend of 10% is paid out of pre-acquisition profit, that is 1st January 2000 pre-acquisition profit, and whenever dividend is paid out of pre-acquisition profit, it is not credited to profit and loss account. Please be clear students that This dividend is paid for 2016 year, and will be paid from pre-acquisition profit, and this will have impact only on the calculation of cost of control. That is, it will have impact on goodwill or capital reserve. This you will understand now once we start solving this with this solution. If we see more, the adjustment also says that additional information is saying that debtors of S Limited includes 25,000 due from H Limited. So this is intercompany transaction that will get nullified. So from this information, prepare consolidated balance sheet as on 31st December 2017. So we will start with preparation of consolidated balance sheet. Here I have given you consolidated balance sheet. Okay. Plus notes to accounts is given. I will just explain how to prepare this working notes. Okay. Please ignore charts. Okay. How we are getting 2,25,000. How we are getting this figure. I am just explaining you with the help of the diagrammatic this video lecture. Okay. So the problem will start with this problem deals with intercompany dividend and intercompany transaction also. Solution to aid working note with the help of diagram. So first we need to calculate percentage of holding. Percentage of holding will be how much shares have been acquired by holding in subsidiary. So in the problem it is mentioned that they are acquiring 45,000 shares in subsidiary company. Out of 60,000, I have already told you how we are getting 60,000. That is 6 lakh divided by 10 rupees multiplied by rupees 100. The amount will be 75% will be the holding share, and the remaining balance will be 25%. That is will be called as minority interest. If we see this is partial holding. Whenever there is a partial holding, there will be calculation of minority interest. Once you have understood the holding, we will start with help of diagrammatic explanation. So 1st January 2017, this is important, and 31st December 2017. Both these dates are important. On this date, we will calculate cost of control, that is goodwill or capital reserve is calculated. On this date, we will calculate minority interest. This date is called as date of acquisition. This date is called as date of consolidation. For both this calculation, we require net worth. To calculate net worth, we required share capital, general reserve, and profit and loss account. So as per the information given in the balance sheet, share capital of S Limited as on 1st January 2017 is 6 lakhs. General reserve is given in the additional information as 1 lakh. And profit and loss account, we are having a adjustment. Okay, very important adjustment. The adjustment says that the dividend is paid for 2016 year, and dividend will be paid from pre-acquisition profit. The profit in the additional information is given as 1,20,000. From this 1,20,000, dividend will be deducted. Dividend, I have already told you that 6 lakhs into 10%, dividend is 60,000. So from 1,20,000, whatever profit is there, it's on 1st January 2017, 60,000 will be deducted. So profit and loss account, profit as on 1st January 2017 is 60,000. The total of all these three is 7,60,000. Out of the 7,60,000, holding will get 75% and minority is 25%. While calculating cost of control, we are only bothered about holding company share. So 7,60,000 into 75%, the value of B Limited as on 1st January 2017 is 5,70,000. But if we see in the balance sheet, the amount paid is 6,75,000. So they are paying extra. So 1,05,000 they are paying. There is one more adjustment here. Out of this 1,05,000, they are getting dividend also. Dividend total they are getting dividend which is offered by S Limited. 60,000 is being given dividend. Out of the 60,000, 75% will be received by holding company. So if we see 60,000 into 75%, that is rupees 45,000 will be deducted, and the goodwill or capital reserve, goodwill is goodwill is 60,000, and this goodwill will be shown in the balance sheet in the asset side. So, in nutshell, dividend adjustment says that in July 2017, H Limited received 45,000 as dividend from S Limited. Yes, this dividend was paid from pre-acquisition profit of 1,20,000. This dividend should have been credited to investment in the share of S Limited account, but wrongly credited to profit and loss account. So, whenever dividend is given out of pre-acquisition profits, it should never be credited to profit and loss account. So here, from the profit and loss account, whenever we are doing the notes, working notes, from this profit and loss account in the working note, dividend will be deducted. Therefore, 45,000 is will be deducted from goodwill. Okay, this adjustment is the only one adjustment, and same 45,000 will be deducted from profit and loss account of H Limited. Please remember, students, that we are just deducting this only because it is wrongly credited as per the additional information given. If no additional information is given, then we will not deduct this. Only this adjustment will come, and this adjustment will come, and nothing else will come. We are just deducting only because it is mentioned, it is credited. If suppose the dividend was instead of pre, it was post acquisition profit, then there will be no adjustment of this kind because it is has to be credited to profit and loss account at H Limited. That's it. Now, once you have understood this, now we will see calculate minority interest. 6 lakhs, 1 lakh general reserve information from the balance sheet, and here 2 lakh is given in the information in the balance sheet. Total is 9 lakhs. Out of this, holding will get 75%, minority will get 25%. So 9 lakhs into 25%, minority interest is 2 lakh 25,000. This will be shown in the balance sheet in the liability side. Now, once we have calculated goodwill, minority interest, now we have to see what is the post acquisition profit. So post acquisition profit is nil. Here there is no change. In general reserve there is no change. Whereas on profit and loss account there is a change. Change will be from 60,000. There is a change to 2 lakh. That is 1 lakh 40,000 is the change, and that will be given 75% will be given to holding while doing the consolidated financial statement. Now, with this working note, I hope your concept is clear. Please remember that whenever dividend adjustment is there, if dividend is issued, dividend is given out of pre-acquisition profit. In this problem, it is given from pre-acquisition profit of 1,20,000. There will be only one if there will be effect on preparation of balance sheet, that is preparation of goodwill, that is it will be deducted from whatever answer you are getting, it will be deducted from goodwill or capital reserve, and same, and the dividend which is issued will be deducted from profit and loss account as date of acquisition, but it will never be credited to profit and loss account of holding company. But it is mentioned here that it is credited to profit and loss account. It is wrongly credited, that's why it is deducted. Same 45,000 will be deducted. But if the dividend was issued after out of post acquisition profit, instead of pre, it was declared out of post acquisition profit, there will be only one effect, that is it will be added to profit and loss account of holding company. That's it. Okay, with this your concept is clear. Now we will move on to preparation of notes to accounts, working notes to accounts. Okay, first one is share capital. The amount will be 1,20,000. Then reserves and surplus. General reserve is given 1,20,000, and B limit S limited. There is no change in the reserve. 1 lakh minus 1 lakh. So 1,20,000 will be shown in notes to accounts. Was in working notes to accounts, and then it will go in balance sheet. Profit and loss account H limited is 2 lakh. H limited, and whenever Please remember that whenever dividend is issued out of pre-acquisition and it is wrongly credited, it has to be deducted. Okay, this dividend will be credited to this holding company profit and loss only if it is dividend is issued out of post-acquisition profit. So here 1,55,000 is the total. Now we will add S limited profit. So S limited 2 lakh minus 60,000, that is 1,40,000. Out of 1,40,000, 75% will be holding company share. 1,05,000. Total is 2,60,000. So next sundry creditors and sundry debtors we will do simultaneously. Reason is there is intercompany transaction. They have mentioned that debtors of S Limited includes 25,000 due from H Limited. Additional information has mentioned that debtor of S Limited consists from H Limited. So basically means that in the books of debtor of S Limited, that is basically if you understand that S Limited has sold some goods to H Limited. So in books of S Limited will be the debtor, and in books of S Limited will be the creditors. The amount, so this is intercompany transaction. Whenever this kind of transaction are there, they are nullified. They are not shown on the both the side. So we will see now S Limited sundry creditor is 2 lakh. In this 2 lakh, 25,000 H Limited is supposed to pay S Limited. Okay, so from this we can deduct 25,000, but in this problem I will show you another way how we can show directly the impact. And S Limited 1,60,000 is the creditor. In H Limited debtors are 1 lakh and S Limited debtor are 1,80,000. In this 1,80,000, 25,000 they are supposed to receive from H Limited. So if we see that from this 2 lakh creditor, that is H Limited is supposed to pay out of this 2 lakh 25,000 to 1 lakh 8 to this S Limited. So we have to deduct 25,000 from here and 25,000 from here because this is intercompany transaction. We can show in this manner separately 25,000 deducted here and 25,000 deducted here, or another way around we can directly show 25 deducted here and 25,000 deducted here. The effect will be same, and then we will get the answer of 3,35,000 sundry creditors and sundry debtors as 2,55,000. Okay, so this is called as intercompany transaction. There are high chances that this kind of intercompany transaction will be asked in your questions. Now fixed asset, the amount of land and building H Limited, there is no adjustment, so directly we will add both that will come in notes to working notes to accounts and then balance sheet. Plant and machinery, okay, same. Cash at bank, so there are no adjustment here. So with this, your problem number 8 is complete. If you have any query relating to any working notes, please WhatsApp me along with the problem number and your query. Thank you, students.